Bitcoin just smashed through $112,000, a new all-time high. But here's what nobody's telling you. 4 major valuation models say we're still early. I've been in crypto since 2020, rode the ups and downs, and lost money making rookie mistakes. Today, I'm sharing everything I wish I knew before blindly jumping into crypto and Bitcoin, including whether you should buy, sell, or wait right now. Look, I get it. You're working your 9 to 5, scrolling through Bitcoin headlines during lunch breaks, wondering if you've already missed the boat. Now, before we dive in, I need to be crystal clear about something. This is not financial advice. Everything I'm sharing is purely for educational and informational purposes. Cryptocurrency investments, including Bitcoin, are high risk and definitely not suitable for every investor. Only invest what you can afford to lose, and always do your own research. Also, just a heads up, this content isn't intended for viewers in the UK. Alright, now that we've got that covered, let's get into the good stuff. Back in 2021, I was exactly where you are now, curious but clueless. I jumped in without understanding the basics and made every mistake possible. Lost money on emotional trades, bought tops, sold bottoms. But here's the thing. After 4 years of learning the hard way, I've cracked the code on reading Bitcoin's true value. And today, I'm going to show you the exact framework I use to decide when Bitcoin is cheap versus expensive. No guesswork, no FOMO, just cold, hard data. But here's the problem. Bitcoin just hit new highs and everyone's panicking. Should you sell now? Is this the top? Can you still buy more? I was staring at these same charts, analyzing the 4-hour time frame out after Bitcoin broke to new edge. I'm seeing fair value gaps and order blocks that could signal opportunity, but on the 15-minute chart, there's no clear change of character yet. The short-term bias is still bearish. Then there's Bitcoin dominance potentially getting rejected, which could mean altcoin season is starting. But if BTC dominance keeps climbing, altcoins might crash again. Meanwhile, Total 3 shows bullish bias on the daily time frame. It's confusing as hell. Sound familiar? This is exactly the analysis paralysis that kept me broke in my early crypto days. But then I discovered a system that combines technical analysis with mathematical valuation models. First, the technical side. I analyze multiple time frames for market structure. On the 4-hour chart, after Bitcoin broke to new edge, I'm seeing several fair value gaps and order blocks. These aren't danger signals. They're actually potential entry zones for smart money. On the 15-minute time frame, we haven't seen a change of character yet, so the short-term bias remains bearish. This means patience is key. Now, Bitcoin dominance is showing potential rejection at current levels. If BTCD gets rejected here, altcoins could start their rally. But if dominance keeps climbing, altcoins might face more pressure. So let me answer the million-dollar question. Is Bitcoin at the top already? Or can it still go higher? To figure this out, we need to determine whether Bitcoin is overvalued or undervalued right now. Forget the social media noise and emotional guesswork. I'm going to show you 5 valuation models that give us objective, data-driven answers. These aren't opinions. They're calculations based on Bitcoin's actual fundamentals and historical patterns. Let's dive into the math. First up, the power law model developed by a mathematics professor. This model fits Bitcoin's entire price history using a logarithmic curve. Think of it like Bitcoin climbing a mountain. There are ups and downs along the way. That's the yo-yo effect. But the long-term trend is always upward. As of right now, the power law model pegs Bitcoin's fair value at around $115,000. We're trading at 107K, which means according to this model, Bitcoin is still slightly undervalued. We haven't even reached mathematical fair value yet. Second model, the logarithmic regression band. This draws upper and lower logarithmic trend lines around Bitcoin's entire price history, creating bands that show us overvalued and undervalued zones. Here's what's happening right now. The lower support band sits at approximately $126,850, and we've only just crossed above this level. The upper resistance band, that's sitting between $150,000 to $190,000, which represents potential cycle high territory. What does this mean? Crossing above the lower bound suggests we're in early bull run territory, not late-stage overvaluation. We're nowhere near the upper band where previous cycles have topped out. The regression model is telling us there's still significant room to run upward. Third model, stock to income. Now, you might be familiar with the famous stock to flow model, but stock to income is actually more accurate because it adds minor transaction fees into the equation. This gives us a fuller picture of Bitcoin's scarcity and the total network revenue. The stock to income model looks at Bitcoin's limited supply against the income generated by the network, both from new Bitcoin creation and transaction fees. Here's the fascinating part. This model forecasts a mid-cycle price target around $341. At our current price of $107,000, we're sitting well below that benchmark. According to stock-to-income mathematics, Bitcoin has roughly 3x more room to grow before reaching overvalued territory. Fourth, the MVRV-Z topping cloud. This is my favorite because it's so visual. MVRV-Z measures market value versus realized value to spot overvalued and undervalued zones, and it color codes them like traffic lights. Here's how it works. When Bitcoin enters the yellow and orange clouds, that's your warning zone, historically where major tops happen. Red clouds? That's extreme overvaluation territory where smart money starts selling. Where are we right now? Bitcoin's MVRV line hasn't even touched the yellow warning clouds yet. We're still in the green safe zone. This indicator is basically telling us we're not in any danger of overvaluation. The math says we're still early in this cycle. Now here's one more model that's incredibly visual, the Bitcoin Quantile Model. This breaks Bitcoin's price into color-coded risk zones, like a traffic light system for investors. Purple or frozen zone means Bitcoin is extremely cheap, only happens at market bottoms. Green is the transition phase, still relatively safe with low risk. Yellow is the acceleration phase. Price starts moving fast, but risk increases. We're about to enter this phase, which we haven't touched since the last cycle. Orange means high risk, significant price increases. Red is the danger zone. Peak prices, very risky to buy, often signals market tops. Right now, we're still in the safe green zone, nowhere near dangerous territory. So here's the bottom line. All 5 models are telling us the same story. The power law says we're undervalued at 115K fair value. Logarithmic regression shows we just entered early bull run territory with upside to 190K. Stock to income projects 341K, mid-cycle targets. The Quantile model has us in safe green zones, approaching acceleration phase. And MVRV-Z confirms we're nowhere near the danger clouds. Bitcoin at 107K isn't expensive. It's actually still mathematically undervalued according to every major model. Remember, the best time to buy was when people were scared. FTX collapse at 16K, Germany selling at 58K, the April crash to 64K. But math doesn't lie. We're still in the early innings of this cycle, not the 9th inning like the fearmongers want you to believe. Look, I've been where you are, confused by conflicting advice, making emotional decisions, losing money on bad trades. That's why I created this channel. to give busy professionals like you the real data, not the hype. If this mathematical breakdown helped you see Bitcoin clearly, hit that subscribe button and ring the bell. I post weekly deep dives breaking down Bitcoin for working professionals who want to invest smart, not gamble. What's your take? Are you convinced Bitcoin still has room to run? Drop your thoughts below.